Hello, everyone. Welcome to the Road to Retirement podcast. Tony Marlette Jr. here, and as always, with us, Tony Shore with Gradient Investments. Good morning, Tony.
Well, good morning to you, Tony. You can never have too many Tonys,
I
right?
think we mention that in every show. Hopefully, nobody gets confused. So,
Yeah, yeah. Well, you're Tony Marlette. I'm Tony Shore. There's a big difference there.
yeah, a little bit,
Yeah.
little bit of a difference there. So,
So, what are we talking about today? What's going on out there?
we've hammered inflation so much, and I know we
Right.
talk about it all the time. It's obviously very relevant. But I thought we could talk about some different ways to actually handle inflation. We won't talk about how or what happened or how we got here. We've kind of gone through a lot of that. So what I thought we could do is talk about some top investments to go to take advantage or to at least make inflation work for you. Maybe how to rethink your portfolio over the long term.
Sure.
And then finally, we'll talk about really what to do, what not to do, and then how to profit when inflation is surging.
Oh, wow. Okay. But before we jump into that, and I'm myself not a golfer, but I think the big news story right now is the PGA merging with Live,
That's
LIV.
unbelievable.
It is unbelievable, and it has I think it's all about money. This is a financial show, so why not bring it up? I think it's nuts, and people are up in arms. Of course, now they're saying the DOJ might stop the merger, and if people don't know, I'm sure everybody knows by now, right? That
Yeah,
the
yeah,
PGA, which is the American run golf association, been a nonprofit. It is basically the institution of professional golf. It's the PGA. It's like the NFL to football or the NBA to basketball. Um, but now they say they're going to merge with the new league called Live, which is 100% owned and operated by the Saudis, or for the
hmm
most part. And so the Saudi Arabian government is going to be the principal financier of this new league that's a merger of the PGA and Live. And so that has some people up in arms. Plus, people left the PGA, and the head of the PGA said, before it said you can't go to this Live based on ethics. This is terrible. We don't condone that, and now they just announced they're merging with them.
yeah, yeah. I was really surprised. I mean, there are, you mentioned the DOJ potentially picking this up. There's obviously undertones of world events going on here.
Sure.
You have us going to Saudi Arabia for oil. You had this Saudi Arabians killing an American journalist a few years ago. So,
Yeah.
there's all kinds of undertones. But bottom line, which you can get caught up, I think, all day in those, and people do, and frankly, maybe they should for some of it. To some of the golfers' credit, they said, look, we're not running for office. We're trying to play golf.
Yeah.
One of them said, I don't know if it was Mickelson. One of them said, like, well, I'm just trying to make a living. Okay, that's maybe a little drastic because you can make a pretty good living just playing on the PGA without,
Yeah.
But again, I mean, they're maximizing just like anybody else would do in
But
their
can you make
careers.
200 or 3? One of them got a $300 million contract. That's crazy.
Yeah,
That's real money even to you, Tony. I mean,
even to
that's
me, even to me.
no, but you've got a point. I mean, to what extent you allow capitalism and separate the politics from the business. So it is interesting. I'm not taking sides, although I feel for, I mean, every person involved with 9/11, all the terrorists were from Saudi Arabia, the main terrorists. So the 9/11 families and the organizations that support them are very up in arms about this. So there are political ramifications. So it'll be interesting to see what happens. And financially, I mean, all the people that stood their ground, all the golfers that refused to go to Live and got offered money, all the top golfers that refused, gave up hundreds of millions of dollars And now they're part of it anyway, so they're really not
Yeah. And
happy.
then, yeah, on the flip side of that, they're the people that took the jump to live were told they
Yeah,
could never play in the PGA again, and now they're
yeah.
not. They got the money and they're being, essentially welcome back.
Yes. Yeah, interesting. Well, let's jump into your topic
That would have
because
been an
I
interesting. That would have been a really good topic today to go into and
well,
to
we
prepare
can
for.
talk about it more later. I just thought we'd just to throw that out there because it's what everybody seems to be talking
Yeah,
about the last couple of days. But people are still talking about inflation, and I can't believe it.
I know.
So, but I like your attack for today. So during times of high inflation, maybe there's some moves you can make. You're saying,
Yeah, yeah, and I mean, we're supposed to be at the peak of inflation right now, and it's kind of like just leveling off, and maybe we're even starting to see a little bit of a dip month over month, but it's still been really, really persistent and really stubborn. So, if we end this year around 4.5%, which I think is kind of a consensus, we'll still be at quote unquote high inflation for about 2 years now. So I would consider that long term
oh
uh,
yeah,
for an inflationary period. So a lot of investments are not good during periods of inflation. But remember, when inflation goes up, the Fed uses interest rates to combat that, as we've seen. We keep seeing interest rates rising. There's now talk by the end of the year, if we do get inflation under control, that there might even be interest rate drops. So,
yeah.
interestingly enough, and no pun intended, um,
Interesting enough.
exactly. So I'm glad somebody
Oh,
caught that because
oh man, I should have.
there you go. I was waiting for the crickets. Um, Gold is usually an investment that can pretty much handle any period of volatility. So um, investors usually go out and buy gold, or even if you're not going to go buy physical bars of gold, gold ETF or gold mutual fund, to really protect the value of their dollars during high inflation periods.
Sure.
A lot of these things that we talk about, some of these investments we talk about today, especially anything that's like a precious metal or anything issued by the government, you can buy it in one of two ways. The easier, more common way to do this today is going to your brokerage account and buying an ETF, as opposed to, say, going to um, a gold reserve and buying a bar of gold, or going directly to the treasury and buying an individual treasury bond.
Okay. So precious metals and maybe some specialty investments. I guess when inflation started to get high, maybe property. I don't know.
So that's an interesting one, because I always thought that, the logic tells you that when inflation gets high, they raise rates, and when rates raise, real
People
estate or
stop
buying new
buying.
properties, right, becomes less
Yeah.
attractive. But you're right, it turns out that property is one of the things that appreciates. I think maybe
Yeah.
it's because families don't move based on inflation. They move based on need for the most part, and the
Yes.
bulk of the people that buy properties are families. So when it comes to things like that, there's buying going on there no matter what.
Sure. 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 Well, and I get it. It's been hard to after 2022. People are like, where looking around, where do I go with my money
Yeah,
that I'm trying to invest or save for retirement? Um, and so you want to make sure that you don't miss out on the growth after a year like 2022. And we've seen stocks, S&P, turn around this year, and we've seen some of the tech stocks doing better than last year. I mean, last year tech stocks tanked.
oh
So
yeah,
um, it is interesting, and I'm glad to see inflation ticking downward. But again, what happens in the markets will be determined by maybe what the Fed does. Will they lower it again? People are saying they're going to take a break this next round, but
yeah.
if they decide not to, how will that affect the markets?
Yeah, we keep hearing pause. That's
Yep.
that's the intended, or that's the predicted course going forward, and then we might see it drop even before the end of this year. So,
Yeah.
you don't know. There's a lot that goes into that. One thing that, when interest rates rise, insurance companies tend to increase rates on fixed index annuities. So,
Ah, yes.
and it's an interesting, when you look at it, the market, you might have a really high cap on some of these annuities. I'm seeing higher caps now than I've seen really in 15 years.
And
11
when
and
you say
12.
higher caps, that means if you get a fixed index annuity, the amount of gains you get to participate in is a lot higher than normal.
Exactly
Yeah.
correct. So the amount that you're capped at, or the maximum amount that you're allowed to participate in, is higher, and that's really twofold. One, yes, because interest rates are going up, but two, during periods of inflation in general, uh, people tend to take money out of the market and put it into interest bearing investments, which causes the market to go down. So insurance companies can say, sure, we'll give you a 12% cap because it looks good. And if it hits it, that's great. But their analytical people and their actuaries in the background are not anticipating it to hit that amount per se.
Sure. So I have a question for you, Tony. When inflation just started to skyrocket about a year ago or so, of course, a couple, over the last year and a half, 2 years, um, a lot of people said, or I know some financial advisors, and maybe even you and Chris mentioned this, but I know MIGAs became popular, MYGA, or multi-year guaranteed annuities, because they're a lot like a CD. They work a lot like a bank CD, but their rates and terms got really good when the Fed started raising the interest rates. MIGAs started paying really well and your principal's guaranteed. There's upside. You can get a fixed upside. That's another tool that people can use during high inflation, right? Am I
Yeah,
right on that?
absolutely. And that was one of the ones I was going to mention was, money markets, CDs, fixed annuities, not necessarily fixed index, yes, but fixed
Yeah,
annuities. MIGA is a multi-year guarantee, like you mentioned. And another benefit of that is tax deferral. So a
yeah,
CD, think of a fixed annuity or a MIGA as a CD. It's usually, as the name implies, multi-year, as opposed to, say, a CD, which may be attractive right now at, say, 11 months or even 6 months. A MIGA is going to be a minimum of 2 years. Most of them fall into the 3, 4, 5 year range. But those will pay the same rate. They're guaranteed to pay the same rate. If it's a 4 year MIGA, it's going to pay the same rate for 4 consecutive years. It's compound interest, not simple interest, and it's tax deferred. So you get tax deferral, whereas, we do taxes here, as you know. And
yep.
I saw a lot of people coming in this year with CD interest statements. And that means even if you roll your CD, you still pay taxes on the interest. If you roll your annuity, it's tax deferred. So you do not pay taxes until you physically take possession of the money. So that's a difference there. But yes, that is something that can people can benefit from during periods of high inflation.
Yeah, that's true. Those are all great tools, and I'm glad you mentioned it because a lot of times during down years like 2022 and high inflation, it is good to have some money in some safe options. But you're not saying take everything out of the market and put it into these vehicles, right?
No, of course not. So we are. I'm a firm believer, as a lot of advisors are, as we are at Brookside. We want to spread your assets out amongst different asset classes. We look at everything as like one picture, and then each piece is like a piece of the puzzle. So your whole financial situation is a puzzle, and each solution that we craft for you is a piece of that puzzle.
Yeah, yeah, it is. It's like putting together a puzzle, and I always like the analogy, especially with you and Chris in your office there. What's the most important? I ask people and our listeners out there, what's the most important piece of any puzzle? And some people say, "Oh, the edges, or the corner, or the last piece." But the answer is the box lid, and that's because
That's good.
if you're trying to put together 1,000-piece puzzle or more, and you don't have the picture, the full picture of what it's supposed to be, good luck. you're gonna you're not gonna get that puzzle together anytime soon,
That's good. I like that.
if at all, right?
Right.
And so you need somebody who can help you see that big picture, who's removed from the situation emotionally, who knows what pitfalls to look out for, and they can help you see the big picture so you can make those decisions. And that's what you and Chris and your staff there at Brookside Tax and Financial do. Is you do financial planning, investments, retirement planning, and taxes, and even estate planning. And you need to see that big picture and how everything fits together. So trying to put together a 1,000-piece or a 5,000-piece puzzle without the box lid, without that picture,
Yeah.
you're not going to do it, and you're not going to be very successful. So you want to have a comfortable retirement and not have to worry or sweat about which piece fits where. And that's why you guys provide the big picture to help those decisions come a lot easier. Is that right? Would that be
Yeah,
a good
no doubt.
analogy?
No doubt. Another function of the box lid might be if you put the puzzle back and you have some of it put together, you don't lose all the pieces. So,
Right.
it can be some protection too. But
There you
yeah,
go. I
I
like
mean,
that.
no doubt, no doubt. We take a look at everything. We have tax planning software that we use. We have uh, the whole all the pieces of the puzzle with Medicaid planning or estate planning. And then I like the tools that we use with our partners over at Gradient that literally can show you your an asset map like this asset is going here and this is the difference it's going to make for you. Here's your financial plan, here's your compass. This is what you're starting with, this is what you can work with, and this is where you're going to end up. So we use
Yep.
those. I like those tools. The team at Gradient does excellent job with putting everything in really easy to read, easy to understand format. I mean, this isn't 15 tabs on an Excel spreadsheet with all kinds of formulas. I mean, I'm sure it is to them, but when we see the end product, we show it to our clients, and it's really easily presentable. I like using it.
Yeah, and they end up leaving with a written plan and
Sure,
full reports based on their personal information
absolutely.
as well, and I think that's so important. So there are things to do when during periods of high inflation to either a protect our assets or b maybe make some slight changes and moves to be better invested for times like this, is what you're saying.
Yeah, I agree. I mean, we don't ever want to say, I want to put the caveat out there that we don't ever want to make decisions that are long term based on short term information. So even if inflation was going, let's say 2 years, like we're probably going to be looking at here pretty soon, you want to adjust your portfolio, but that doesn't mean get all out of the market. It doesn't mean, like you said before, put all of your assets into something fixed. Just be a little more calculated with it. Of course, if you're working with a money manager or a financial planner like us, we'll do all that worrying for you. So one example of that, I think, is if you're in the market and maybe 50% of your portfolio is in the market, fair or not, like it or not, small cap companies do not perform as well during periods of high inflation. They do tend to lead us out of recessions. But and when we say small cap, that's usually companies valued between 250 million or 250 million and 2 billion in valuation. But be a little more calculated with your stock. So if your portfolio was divided large, mid, small companies, maybe it needs to be more focused on larger, more established dividend paying companies. Put the small caps to the side for now. Even if you want to get in with, say, some small caps as a buying opportunity or some value, that's fine. Just be aware you'll see some volatility before things go up.
Yeah. Yeah, good call. Well, it's been a great show, but before we go today, Tony, why don't you let our listeners know how they can get a hold of you and Chris and the staff there to set up that complimentary, no cost, no obligation consultation?
Yep, this is Chris's favorite slide. But yeah, it's got our website, brooksidetax.com. our YouTube channel, our Facebook page. We keep the Facebook page a little lighter with pictures of staff, pets, babies, etc. Some trivia on there. Aaron does a
I
great
like
job
it.
with that.
Yeah.
Our YouTube channel, you can go back to old market updates and instructional videos. And I tell people they can go back at our old market updates and call me out for information that I ended up being wrong on. So, but yeah, you can give us
That
a
doesn't
call as
happen.
well, or go online and schedule with us. Not only would your consultation be at no cost, you can pick up one of our books on retirement planning and estate planning as well.
All right. Well, great show today, Tony. And, I didn't even miss Chris today. You did such a good job.
Didn't miss who?
All right. Well, that's a great show. And listeners, thanks for tuning in. That does it for today's episode of Road to Retirement with our host today, Tony. Tony Marlette Jr. Got a little choked up there. So emotional.
I understand. It's been special for me too. All right. Thank you, everyone. Thanks, Tony. Have a good day.
Yep.